Want to spot high probability entries on MNQ in seconds? Let me show you how to find fair value gaps like a pro. On a 1-minute MNQ chart, a fair value gap forms when price moves so fast it leaves inefficiency behind. To find it, look for a strong impulsive candle that skips a price area between two candles. Here's the rule. If the low of the current candle does not touch the high of the candle 2 bars back, that empty space is your fair value gap. Mark that zone. This imbalance tells you institutions likely want price to return there for mitigation. When price pulls back into the gap, watch for confirmation like a rejection wick or bullish engulfing to enter. In uptrends, focus on bullish gaps. In downtrends, target bearish gaps. Simple, clean, and powerful.
Now I'm going to give an example of how to practice this. And just go to a time when you're normally trading. I usually sit down in the mornings at about 8:30, 9 o'clock. I don't like to trade the open. And if you're new, this is a trading view chart. It's 1 minute. And before when I'm trading this kind of system or just looking for fair value gaps, I will open up a rectangle, draw it on the screen, just like this, and then I will set the properties, and I do this. And I have it ready. So I just have the line in the middle that's setting the properties at the 50% mark. Wherever this box is open to, that's half of it. Set the colors to whatever you want. And then I'll get the replay. And this is just for practice. But I'll go back to before the market opens. There's about 8:53. Set it on a speed that you can keep up with, and I'll start the replay. And I'm just looking for fair value gaps. Not looking to trade, I'm looking for a fair value gap. And we're coming into the open, and there'll be a move here in a minute one way or the other that will create a fair value gap. Okay, we broke structure, we pull back, okay, we have a fair value gap. Stop it. Select our box here, drag it down to the fair value gap right here. This candle is the first candle, this is the second candle, and the third candle closed below where the first candle closed. So we have a bearish fair value gap right there. So we have our setup. If it doesn't come back to it and turn away, there's no trade. But if it does, then at that moment, once it turns away, we'll enter it, and then we'll set our stop loss right here, and we'll go for a 1-to-2 ratio. Now, this box will change depending on like on the open here, a little bit volatile, but it's a 25-point fair value gap. So when it turns away from it, the first close outside will be the entry. So we'll see what happens. And again, this is just practice, and this is the way you should practice if you're new. Don't even think about trading until you've pulled back into it. Okay. So we pull back into the fair value gap at 10 o'clock, 9:59, 10 o'clock. You wait on a fair value gap to appear, and then you wait for it to end the price to enter back into it. And then as soon as it leaves it, your stop loss is the top of your fair value gap. Not up here, not there, top of your fair value gap. If it goes through here, it's probably going on up. So just top of the fair value gap. Now, this is a bearish signal, and then I'm going to take this off the screen, and then I'm going to look for a bullish signal. So I'm going to move this out of the way. I'm going to clear this. We're still in replay, and we're still just practicing, but this is how you get good at it. And you can speed up the process, but it takes practice. So we've got the replay running again. Okay. Okay. So we have a clear bullish fair value gap. We're going to get our box. We're going to put it here. We're going to adjust it so that we're only showing the width of the fair value gap, which is right there. This one happens to be 14 points wide. Now, for us to take a trade again, the price has to pull back, then close above. There's our pullback and our close above. Take our long position. We're here. Our stop loss is going to be 32 points. We're shooting for 64. So 1 to 2 risk reward. How we let the trade play out. Okay. This trade actually lasted 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes with a 1 to 2 risk reward ratio, 64 points. 64 on a single MNQ. It's 128 bucks. Pretty good for 10 minutes work. Now these trades, these were picked I set them up. I use the same box. Not a complicated system. It's not financial advice. This is for new traders, and this is a practice method. Now this works on all time frames. It's just the larger the time frame, the bigger the moves are going to be, and your stop losses are going to be bigger. You wouldn't want to take these kind of trades close to the end of session if you're trading with prop firm money, because it might be the Asian session before it plays itself out. So again, these are just practice methods. This is just one step. Later I'll make a video to add another indicator, like I said, to keep you in the direction of the trend. But again, this is for beginners. It's a way to practice. It's all free. The indicators at TradingView, I have one on here, or two, let's see. I have the settlement price and then this break of structure, but it's not necessary for this. And when you're practicing, practice at the times that you would be trading. Don't practice this during slow market hours when the market's flat or there's no players in the market. Who knows what's going to happen at this time right here or something like this. Just practice, go back on the charts and practice and see. And these happen every day. Doesn't matter if it's short or long. There's multiple setups every day. And you don't have to have anything else, just a TradingView account and no fancy indicators. Just, this is a good learning method. If you're already a trader and you've been doing this for a while, this is of no interest to you, and I understand that. But if you're new, this will help. I've been trading for years before I was shown this method of training, and it just keeps you in profitable trades because your risk to reward is 1 to 2. You don't change that. And once you get accomplished at picking out the fair value gaps, the better you are at picking out the fair value gaps with the trend, the greater your win rate will be. And this will keep you from blowing prop firms' accounts. So, again, if you have questions, by all means, ask. In the next video, to follow this one, will be to add another indicator to keep you headed with the trend.